Hey gang, wanted to show you guys an illustration of how to use our calculator. We have had some folks that have had a little bit of confusion using our calculator, so I wanted to walk you through some simple steps of how to use this calculator in order to get a very precise number of how long it's going to take you to pay off your home. So let's go to replaceyourmortgage.com, and up here you'll see that we have calculator. Okay, so click on calculator. It's going to take you to this. All right, so well, perfect. This one's already got 300,000 built in, 3.5%, 360 payoff goal a month. So that's 30 years. But I want to show you something. See, when you're putting in net monthly income, you know that's what your monthly income is. So what you're depositing into your home equity line of credit, and 875 is the interest-only payment of 300,000. So as you can see here in this chart, at 875, the balance doesn't change. It just stays at 300,000 across the board. So some folks are actually putting in their Heloc expense here. It's already built in here, okay? So on top of that, you also want to, especially if you're on a variable interest rate loan, put in 0.5%, a minimum. I think, I've read some economists that say that rates are going to go up, and we did see a slight increase December 17th of 2015 by 0.25%. Now they're not so sure that they're going to increase in 2016, and there might be an increase in 2017. I've read some economists say that they're going to have to reverse the changes and go into negative interest rate territory. I always like to err on the side of caution. What happens if rates do go up? So put in 0.5%. That's kind of in between. So it's not skyrocketing, and it's not going down. So let's put in 0.5% increase each year. Now let's say you have $7,000 household income coming in. So put that in there. Now that is your net after taxes. So again, you're treating your home equity line of credit like a checking account. So we want to measure actual cash flow going in. So if you looked at your checking account, what are you depositing in your checking account on average per month? So that's going to go in there. Here on monthly expenses, this is where you exclude your mortgage payment because, again, you're replacing your mortgage with a home equity line of credit. You do not put in the payment for the home equity line of credit here. Again, it's already part of the $7,000, so it's getting soaked up there, right? Here is all of your additional expenses: property taxes, homeowners insurance, groceries, gas, utilities, vacation, etc. So let's say that number is $4,000. And again, where you get that number is take a look at your checking account because we're measuring cash going in and cash coming out. So if you're looking at your bank statements on your current checking account, let's get an average of what you're spending each month. But be sure to exclude, again, this is very important, exclude your current mortgage payment and your future Heloc payment. That number does not go in that field. As far as annual fee, that number really doesn't change anything. If I put $35 in here, you'll see that down here it's still 122 months. If I put it at zero, $35 a year just does not change things, okay? So in this scenario, $300,000 gets paid off in 10 years and 2 months. Well, let's look at this. Again, back to interest rates. What if you think interest rates will rise more than 0.5% each year? Let's say they rise every time the Fed meets. Okay, so let's do 1%. Well, as you can see here, the payoff went from 122 months to 125 months. So by increasing this by 0.5%, only changed the payoff term by 3 months. What if it skyrocketed 2%? Now at this point, it becomes illegal because there are interest rate caps on this and lifetime caps on HELOCs. So it would be impossible for this loan to reach that. But again, just being conservative, let's say they break federal law and say, we're going to increase interest rates on your HELOC 2% every single year. Well, now you're at 11 years. So you went from 10 years and 2 months at 0.5% increase per year to 132 months. We call that not quite interest rate immune, but as you can see, interest rate is not that important of a factor when doing a home equity line of credit. Cash flow positivity is important. Balance is important. Something has to feed interest rate. So with using a home equity line of credit, you're able to utilize 100% of your income. So your income is not sitting over in a checking account sleeping while you work. Instead, it's going to be in your home equity line of credit, and it's going to be working while you sleep. So thanks. I hope this helps. If you have any questions, feel free to contact us and set up a discovery call. We'll be glad to help. Take care.